While the clock is ticking down to the end of the year, the S&P 500 is firmly on path to the bull market. Investors and analysts are monitoring the rally of the index. The US stock market traded sluggishly on Wednesday, and the benchmark stock indexes were drifting up in an inertial move. As a result, the indexes traded mixed during the whole New York session, but closed with a growth. All three major indexes are on a track to monthly, quarterly, and annual profits. The S&P 500 closed missing by 0.3%, its record high at 4,796. Reached in January 2022. The index gained 6 points or 0.14% to close at 4,781. The Dow Jones notched a new record closing high at 37,656. Wall Street indexes traded in the green in the New York pre-market. Futures on the stock indexes inched up by 0.01 and 0.3%. The S&P 500 is expected to trade in the intraday corridor between 4,761 and 4,798. If it goes beyond these borders, the index could either drop to 4,743 or climb to 4,812. The US stock market remains thin, though showing some signs of optimism. Amid the empty economic calendar and the lack of market catalysts, traders are watching a decline in the US Treasuries and the US dollar. Meanwhile, the S&P 500 is heading steadily to the coveted target of the bull market. Despite the clear-cut bullish momentum, the S&P 500 lacked energy to hit the cherished goal. As a result of the 11 major sectors of the S&P 500 index, the real estate sector showed the largest percentage gain, while energy stocks lost the most. Among individual companies, shares of BT Digital leapt by 18.6% after the mining firm said it plans to double its coin mining operations. The S&P 500 index is up 14% in just 2 months, and its price-to-earnings ratio is up a quarter year-on-year to 24. With little news to digest on the holidays, investors carried on with pushing Treasury yields lower and the stocks higher. This sentiment echoes the Fed's policy decision and expectations of rate cuts, but today traders have another excuse for optimism. Eventually, initial unemployment claims in the US finally did not disappoint the market, but on the contrary, exceeded the forecast. Claims rose by 12,000 to 218,000 last week, above market expectations of 210,000 and indicating some softening in the US labor market. This report is the only important one today and can support America's stock optimism regaining risk. Fed funds futures now indicated 88% chance of a rate cut as early as March, a huge swing from a month earlier when the chance was just 21%. The market has about 157 basis points of easing priced in for 2024, with the Fed's policy rates expected to reach 3 and 3.25% by 2025. Pre-market gains in high-tech stocks supported gains in Nasdaq futures. Among individual stocks, US-listed China stocks rose in pre-market trading. Alibaba, PDD, and JD.com shares grew by 1.4% and 3.7%. In the currency market, the US dollar locked a new 5-month low and then rebounded. Its index remained under selling pressure for the whole day, but it rebounded to 100.90. The intraday CAD for the instrument is seen between 100.60 and 101.20. In a case the index goes beyond the borders, and the seller's target will be 100.30 and the buyer's target will be 101.70. The yield on the 10-year treasuries was 3.817%, hitting a 5-month low overnight. From this low, treasuries recovered to 3.822%. The broader decline waned on the US dollar and lifted the euro to its highest level since July at 1.1139 against the greenback. The dollar index fell to a new 5-month low of 100.61. From these highs and lows, assets turned around, opening the New York session with the opposite dynamics. Treasuries and the US dollar gained ground, but the euro and pound sterling weakened. At the same time, the dollar index is on a track to an annual decline of 2.7% after 2 years of growth. As for the Canadian dollar, it traded steadily intraday. USD/CAD was hovering near 1.3209 before the opening bell, and the intraday CAD is outlined within the levels of 1.3181 and 1.3252. The loonie is still affected by falling oil prices. Oil prices fell by more than 2% on Wednesday and continued to decline today. Both benchmark grades lost another 0.4 and 0.7% today. The crypto market was in a limbo at midday. Popular digital assets traded sideways, accumulating energy for a push. Bitcoin traded at $42,833, or 1.3% down before the opening bell. The number one crypto is not able to escape from the range between $42,760 and $43,400. The sellers' targets remain the same, 42,200 and 41,700. The buyers' targets, as seen, at $4,800 and $44,300. You have watched a review of the New York session. Feel free to share your opinion and ask any questions. Make sure you subscribe to InstaForex TV channel. Our analysts keep you updated on all trends and market developments, so see you online tomorrow.